Trading has closed on May 31st, 2023. As always, we'll start with our disclaimer, go over our calls and make some predictions. It's my trading plan for June the 1st, which is tomorrow. Please remember I can be wrong. Trade at your own risk. Remember I've been busy the better part of this week. Have not been following the market as closely as I would like to. Look for the pattern today with the early low. This is it. Tomorrow should have the early high. We said yesterday's action should lead to further weakness regardless of how we closed. We got that. This green line is an old FOMC announcement price, but the market never forgets it. It's a reminder of what we said, that we should see lower prices. We also called last week for the early high tomorrow. Well, MEJT says this rally is going to retrace, gives us a target 41.7522 and optionally 41.7570. If we don't gap up smartly, that'll have to be the call. But gapping up smartly isn't impossible because we have a wall into the close. We also have gap down, lower low, closed over intraday lows. That's all positive stuff. We're also on the weekly staying over the 89-week moving average. Now, to make my wave count, we should drop to around 4,100 at some point. And that's in conflict with my desire that we stay over this average. So it's possible one of those things isn't going to play out. Certainly both of them can't play out. Now, we can't be certain of the wave count at this point. That's not the one I want to show. Maybe it is. Yeah, sorry. This isn't the only way to count this, but I'm hoping we completed a leading diagonal triangle in A and B, and certainly if that's right, which we don't know, C needs more distance and more time before it completes. And that's what I think is going to happen. Of course, if we just keep going up from here, then the idea is wrong. But I'm looking for that. As far as tomorrow's concerned, we have to use the mixed signals rules, which are here. Pattern has a really high, doesn't mean you won't gap down. It's typically a bullish day with a high in the final hour, but if you fail, it's a straight line drop. It's positive. We gap down, hit lower low, and close over intraday lows. Not all of them, but enough of them. We also have a wall into the close, so gapping up is entirely possible. But there is a lower MEJT target, and these things tend to print. So unless we gap up smartly, the rules say it prints. Now, the target isn't that far away. Nothing stops us from going down and then rallying, but we're just going to use the mixed signals rules. The commonest thing is a gap and a prompt move outside the range. If it's under this, it's probably a straight line drop. If we gap up, we could have a rally day, but let's just see what the open brings. It's a pattern with the early high. Feast or famine, and that's today's call.